You clean it up, you price it right, and the offers come in. Nearly 6,500 San Diego sellers expected that in the first half of this year and pulled the sign out of the ground instead. I'm Ray Stendall, Stendall Realty Group. There are 3 versions of selling a house as is, and by the end you'll know which one you're in. The third one changes who your buyer is, and there's a formula behind what they'll offer you. 6,500 is more homes than this whole county has for sale right now, per the July county report. But look at the rest of that report. Of the homes that closed in June, nearly half went into escrow inside 2 weeks, while 6 in 10 still on the market have been sitting a month or longer. Buyers are clearly still closing, so the question is, what's standing between them and your house? Most sellers hear as is and think it describes the house. As is a decision to stop promising repairs. It does not remove the buyer's inspection contingency. Unless the buyer waives it, an inspector still walks the house, the report still comes back, and that buyer can still walk away or ask for a price cut. The real job is finding a buyer who's comfortable with the house and can handle what the report turns up. So which one are you in? Level 1 is cosmetic. The house still finances and it still insures, so the only question is whether what you spend on the dated kitchen comes back at closing. Sellers at level 1 tend to overspend, and it's the cheapest mistake on this list. Level 2 is property condition, meaning an active roof leak, foundation movement, or unpermitted work. That touches the appraisal, the insurance binder, and the financing at once, and narrows the field to buyers with cash or a renovation loan. You can still sell retail here. Treating every defect as equally urgent is what gets expensive. The third level shows up when the work is heavy enough that a conventional loan won't fund it, and a standard policy won't bind. A buyer who needs financing can't close on it at all. And a normal detached home here is already taking 95 days to sell, per that same report. So a house no lender will touch starts out behind that. So you stop selling to somebody who wants to live in it and start selling to somebody who fixes houses for a living. Now the formula I promised you. An investor prices backward from what the house will be worth once it's fixed, based on what's sold nearby. Call that $1 million. Most of them run the same rule. They take 65 to 75% of that, depending on what their money costs them, then subtract the repairs. Call it 70%. $700,000 minus $150,000 in repairs, and your offer is $550,000. That gap covers their profit, their holding costs, their borrowing, and the surprises that turn up once the walls come open. They absorb those. Whether you're actually a level 3 is the first thing I work out on a call, and I'll tell you how to get one. The expensive mistake is assuming you're a level 3 when you're really a level 2. That's the difference between a retail price and 70% minus repairs. That line also moves by neighborhood. A repair list that pencils in Encinitas can stop making sense in Escondido, because the value after the work doesn't carry it. I've spent more than 20 years analyzing this market, and the sellers who lose the most took the first investor offer without ever testing whether a retail buyer could have closed. So get 3 answers before you go active. What a lender and an insurance carrier will do with this house, what it's worth once it's fixed based on real closed sales, and what the repairs cost from a licensed contractor instead of a guess. Send me your address and photos of the worst of it, and I'll walk the property and the numbers with you. You'll leave knowing which level you're in and what each buyer would pay. Booking links in the description. Ray Stendall, Stendall Realty Group.